Hello everyone, this is Corey Mitchell with Trade That Swing, and welcome to your swing trading stock market outlook for the week of September 11th. Each week I go through the same process just to decide how aggressively I'm going to be deploying capital, or even if I'm going to be deploying capital. So we look at things like how the indices are performing, market health indicators, recent watch list and trade performance, and sector performance. This is basically the first step in my overall strategy, which the first step is looking at overall market conditions, which we're going over in this video. That's going to tell me if I can trade, and if I can, then I'm going to go to looking at individual trades, patterns, and triggers to actually create those trades. So we're looking at this first one here, overall market conditions. Heading into the week of September 11th, conditions are poor. I wouldn't say they're super poor. We have a couple things that are favorable. We have a couple things that are unfavorable. So it's not quite good enough for me to be deploying capital, but it's not horrible either. So I'm just going to currently hold off on deploying capital on swing trades until conditions improve. If conditions improve, we have several watch lists we can watch. The best swing trading stocks watch list. That's just high momentum stocks recently. The stock watch list is actual setups that are occurring. So this one doesn't have any actual setups. It's just watch for setups in these strong stocks. These are some actual setups I'm watching for. And then we have these other lists which get updated regularly, which you also may find some setups in. I look at 4 different indices: the tech stocks, S&P 500, which is just large U.S. companies. The NYSE Composite covers a wide array of stocks of all sizes and industries. Great measure of how the sort of average stock is doing. And the Russell 2000 looks at smaller companies. I also have the Canadian index and Bitcoin over here. So if we look at these, we can see overall uptrends, but we had this pullback recently in August, and we're trying to push up from that. And some of these were a little bit bigger than others. So, but overall, some damage was done here. We started taking out some major swing lows. Here, we got pretty close to this swing low before we bounced. S&P 500 dropped all the way back to this prior swing low. But if we kind of look at how this uptrend has unfolded, we've had pullbacks. The first one of the year was about 9%. Then pullbacks have been 3%, 4%, 5%. So not very big. This one was about 6%, approaching that. So it's not a major concern of a pullback. We're still in what I would call common for this uptrend that's been unfolding. So that's good. But the TSX, the Canadian index, you can see pretty much rangy. So not great conditions in the Canadian market. I do like the overall uptrend here, but I just prefer, given that we've started to drop enough to get back to these prior swing lows, I just prefer to give it a little bit more time. We'll look at the health indicators. Once those start improving, I'm more likely to jump back in. So just sitting in cash because we are kind of in this pullback. Not really sure which direction it's going to go phase. And Bitcoin has come all the way back to these levels. Wouldn't be surprised now it's been hanging out here if it did take out this low again. And then if we get the sharp pop, that's probably the false breakout. Look for higher prices. If we get a legitimate breakout, strong downward movement, then then maybe we're heading lower for a while. But either way, I'm not involved in this right now, or wouldn't be swing trading it at that level. Wait to see how it reacts, either up off this level or down below this level. The state of the market health indicators. So we can go through these. This is the number of stocks above their 50-day moving average. The orange line is S&P 500 stocks. The more turquoise line is all U.S. stocks. And so about 34% of S&P 500 stocks are above their 50-day. About 32% of all U.S. stocks are above their 50-day moving average. So most stocks, about 65% of stocks, are below their 50-day moving average, which means they're in short-term downtrends. There's nothing magical about a 50-day moving average. It's just a crude measure of how many stocks are moving up or down. And we can see when this gets below 50, usually we're in sort of corrective or choppy behavior. When we're above, we tend to get more upward trending behavior. Simple as that. So this is not a great time to be in the market, I would say. just as, it's more likely that stocks are going to drop on you than rally. Volume, not super important to me. This is daily percentage movement of the S&P 500. Uptrends are characterized by lower volatility. You do not see minus 2% drops. We haven't had any of those, going back to, I think about March, we had some big drops. We've had some occasional 1% drops, but I consider the 2% level, this should be panned out a little bit more so that you could see some of these bigger drops. But we haven't had any in a long time. It's been quite a bit smoother, lower volatility, and that's good. So that gets a smiley face. This one is basically just following the S&P 500, so it's not really telling us anything. And this one should actually have a smiley face on it too, because we had 2 back-to-back 80% upside days. This is volume divided by total volume. So what that means is if we had 2 back-to-back 80% upside days here, and what that means is that 80% of the volume on those days occurred in stocks that moved higher on the day. And that shows a lot of enthusiasm for buying and is typically a bullish sign. And it pretty much corresponded with, pretty close to the lows here. So that's a good sign. Coming after a correction, it shows momentum's coming in. So hopefully from, we're starting a little uptrend again here. Hopefully this, or maybe it drops a little bit more, but maybe that's our low point and we start heading back up. But I don't make that assumption. I want to see these other indicators start to kick in. If that S&P 500 and the other indices start moving up, that's going to be reflected in our health indicators. So there's no reason to jump the gun and say, I need to get in right now, because if this chops around for a week, you're just going to get a bunch of stop outs before the move. So we wait for those health indicators, wait for that momentum to pick up in stocks, and then we can be on our way. Ultimate indicator is how many quality setups there are. I am seeing quite a few setups out there right now, especially rounded bottoms. They're starting to form. Right now, a lot of them have had to run up a little bit, and we're getting that pullback. And that's what we need for that pattern to form. All these patterns, rounded bottoms, contraction patterns, all those ones that I look for setups in are covered in the Complete Method Stock Swing Trading course. And so we're just waiting for this to move up. It's been a little bit choppy. A lot of them aren't quite there for trade setups yet, but if we start to see those moves up again, that's going to trigger a lot of those trades. So just waiting for a little bit better price action before getting involved. But overall, there are some trade setups out there, but it's just a little bit too early for me to pull the trigger until we start seeing some of these ones improve that are not as good. Sectors on the move, not too much has changed here. Energy, communication services, consumer cyclicals, financials, and technology. If you look at pretty much the tops, consumer cyclicals and technology got hit a little bit last week. But if we look at the 1 month and 3 month, we have energy, technology, communication services, cyclicals, financial, energy, communication services, cyclical, financial, technology. They're all clustered up in the top of the last month and the last 3 months. And a few of those are also did okay last week as well. So those are the sectors that you could focus on. Again, you don't need to do that. If you're running a scan, you can run it on all sectors. You're just going to get the strongest stocks. They're generally going to be from those sectors anyway. But if you're really pressed for time with your scanning for setups, again, even though I provide watch lists, I recommend that you do it yourself, because if I get hit by a truck tomorrow, you still have to know how to do this yourself. And so when you're running your scans, if you're limited on time, you could implement, just say, only show me technology and consumer cyclical stocks. And that's going to reduce your scan list down. It's going to make it quicker to go through and look for setups. So what I'm doing right now, well, I'm going to sit in cash, wait for conditions to improve a little bit and for more setups to start getting closer to those triggers, which is going to require prices to start moving up. There's lots of rounded bottom patterns out there right now, so those could produce trades if we see conditions improve. But I'm not going to jump the gun and take trades now. I want to see those conditions improve. Then I take what trades I can. and that just helps protect me from, getting stopped out in choppy conditions or buying right now and then Monday, Tuesday, Wednesday we pull back and you get stopped out. Wait for that momentum to come up. And as always, I'm always day trading the Euro USD and or stocks, and passively investing, just putting a little bit into certain ETFs each month. If you're interested in any of those, the nice thing about those is that you can kind of do them all the time. Whereas with swing trading, I'm in the market for a little bit, then we take a break when we're in pullbacks, then we're back in the market. It's more of this kind of on, off. Whereas with day trading and the passive investing, it's just, you can kind of do the same thing every day, each month. Each day or each month. So that's your swing trading stock market outlook for the week of September. Have a great week out there and happy trading.